Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's have a look on the Bitcoin market again. As you understand from our previous updates, actually the strategy right now is building around the pattern that we are getting on a weekly chart, and I'm speaking about the double repo sell pattern. So last week, when we've got the close below the 3x3 moving average here, we've got the confirmation. So in fact, here we have in place double repo pattern is confirmed. Its target, minimum target, stands around 81 support. So this is 50% support of the whole thrusting action to the upside. At the same time, we can't just ignore some tricky moments that stands around it. For Judd Napoli type of the analysis, the existence of the high wave pattern could mean nothing. So actually he doesn't consider some candlestick patterns or something of this kind. But in general, the way how market has confirmed this double repo, it's kind of the indecision action. And very often double repo patterns, when they're not working, is turning to either triangle, pennant, or flag consolidations. So actually what I draw here, so you could see that if something will go wrong, it might be just the tight flag consolidation on the monthly chart. And instead of the bearish pattern, we could get the bullish pattern. Besides, don't forget that by Judd Napoli, the failure of the double repo, it is not just canceling of the normal double repo, of the direct double repo to the downside. It is opposite directional pattern as well. So if we get failure pattern here, it means that we will get the bullish pattern. So, and with all this, some tricky moments in place, we think in the current situation that maybe it makes sense to try and take position. If you would like to trade it on the bearish side, it would be better trying to take the position as close to invalidation point as possible. For the double repo, it is normal when it take pause for a few candles after confirmation and the 3x3 just envelop the price action. So it's just creating some kind of the envelope around it, so holding the price action somewhere in a tight range. Then usually follows downside drop if double repo works properly. And taking the position very close to invalidation points led us to actually save our money. And if we will get the erasing the canceling of this with the upward action, it led us to take reasonable risk for this trade and reverse position relatively fast, if this performance will happen. That's why in the current circumstances, if you take a look at the daily chart, I see actually nothing interesting. Trend remains bearish, market still holds the shape of kind of the double top, stands in a very tight consolidation. No additional pattern has been formed here. So you can see just in recent week market was standing in a really tight range. But on the lower time frames, there are something interesting. So first of all, if you take a look at the 4 time frame chart, recall what we talked about bullish trade with this ABCD pattern. Initially, we talked about 108 target, this AB equals CD. But in the current circumstances, when the double repo has been confirmed, I think that it will be better to consider tighter standing target if you intend to trade it on the long side. It's around 102.40. Why? Because this is actually invalidation point of the double repo. So breaking up this level, canceling the weekly pattern. So it would give us bullish pattern, and we should start searching chance to go long instead. But if it starts working as it should, that will be the point where a theoretical downward action could start. It could start even earlier, just because double repo has been confirmed, and actually it might start at any point. But since we had in general bullish patterns on lower time frames, it's reasonable to suggest that market could try to complete at least the minimum target of this extension, which is the 618 extension that creates an agreement with this level. So taking it all together, we suspect that if you would like to take the long position, or maybe you already have taken it last week, it would be better to consider this level as a target. Those who would like to trade a double repo on the bearish side, on the weekly chart, you could consider this level for potential entry on the short side. Of course, if we will get some thrusting action for this level, we'd not consider any shorts. It's obvious. But if our prediction will be relatively gradual, market will reach this level, that's the point when we will have to make the decision on a possible short entry. Because this will be a kind of the culmination point for the double repo trading. It provides best risk-reward ratio because you could place stops very tight. And you could possess yourself with the weekly pattern, but with this very small risk. And that's why this level is very important. That's actually what we have currently. If you would like to trade on the long side with the high standing targets on the high time frames, we suggest that maybe it would be better to wait when the situation with the double repo will be resolved, or at least move stops to the break-even if you intend to take the position before the situation will be resolved. Because for long-term charts, it might be really dangerous to go against the directional pattern that we have. On the hourly chart, I do not see something really special. The same Gartley's Chipu-2 that we've got on Thursday still stands here, but with this lasting city leg, you can see it's more extended. Some market right now is starting showing some kind of the response on the level that we discussed even on Thursday. On the other markets, if you take a look at the bonds and the dollar index, you also could see there's some reaction. So let's see what will happen. But potentially the double repo on the weekly chart might be really a great pattern with a very significant performance in the nearest time. So let's see what will happen.